Hey, this is Matt from InvestiQuant. Today is Thursday, June 24, 2021. And before we get started here today, I wanted to remind you one last time that today after the close is when we will be holding our intraday trading webinar, and we'll be going over a lot of the benefits of short-term trading. So this will be a purely educational webinar. You can see some of the bullet points here of some of the things that we're going to be going over. This one's really interesting. Why traditional diversification will not protect you most when you need it. So there's some interesting stuff that Scott's going to be sharing this afternoon, as well as some other ideas here that you may find interesting. So that's going to be today after the close. There's a link underneath this video where you can come register for this event. You'll just click on the link, fill out your name, email, and register, and you will be able to attend at 4:30 p.m. Eastern Time today. So would love for you guys to join us here for this educational event. All right, now let's hop into today's study. Today is the GDP Report Day. That day often has some stronger biases associated with it, but what we're going to be doing today is just taking a look at how the market has performed in a similar environment, because environments matter on GDP Report Day. So let me go ahead and set this up. I've got all four instruments loaded here. The setup is based upon entering the market long at the open or regular trading hours, which is 9:30 a.m. Eastern Time, and exiting at the close, which is 4:15 p.m. Eastern Time. Now, currently, we are trading higher in the overnight session, so I'm going to add gap up under gap direction here, which just means that the opening print is above the prior session closing price. And then I'm going to add the market environment that we are in. We are in a very strong market environment. We are above a 10. We are above a 200-day simple moving average. We're trading right at all-time highs in that area right now. So we are very strong there. And then I'm going to go into the market events section, and I'm going to say that today is the GDP report. So that is available here in market events. Market events will show you the day of the event. I'm going to hit equals here next to GDP report. We also have the ability to test, day before, day after that GDP report. All that stuff is testable here within Discover, but today is the day of the GDP report. It'll be out at 8:30 a.m. Eastern Time, which is not has not happened yet. I'm recording this ahead of that release, but it'll be out here shortly. And now I can click view results. And here we go. These are the results based upon entering the market long at the open of regular trading hours when you gap up on GDP report day in a strong bull market. So historically, S&P 36 samples here dating back to 2003. The NASDAQ has 48, the Dow 35, and the Russell 33. And you'll notice these win rates are all very neutral. You got S&P coming in 47, so just a touch weak. You've got NASDAQ just barely above 50% there at 52%. The Dow is the strongest of the group at 57%, and the Russell coming in at 45%. So very mixed numbers there. None of them very strong. If you look at the average win and average loss, you'll see the average loss is larger than the average win in the S&P. It's very similar in size for the NASDAQ, and then the average loss is larger in the Dow and the Russell. Now, this was interesting to me, and I mentioned it earlier here, because the GDP report day is often a stronger, more bullish day. But in this environment where you are in a strong bull market, that edge is not there. So in fact, let me just come into this indicator section. I'm just going to remove above the 10 and above the 200 so you can just see all of the up gaps in the GDP report, and then kind of just pay attention to how these numbers change. So you see these are all very neutral. Average loss is typically a little bit bigger. Let me go ahead and get rid of that above the 10, above the 200, and click view results again. There we go. So if you look at all of the samples when you're not just in the bull market environment, so this would include the bull market environment, but it would also include a weak bull, a bear market, all that sort of stuff. Notice how much stronger those numbers become even with those weaker scenarios in there. So historically, this day has been bullish altogether, but in the current market environment we're in, it is very neutral. So hopefully you found that helpful. Good luck today. A reminder, that webinar today after the close, the link is below this video so that you can register for that, and hopefully we will see you at 4:30 p.m. Eastern Time. We'll see you then.